Hello and welcome. Chris Gilmore here from Strategy First Financial Planning. Today I'm going to be talking to you about Stage 3 tax cuts. Now, I've no doubt you've heard about this in the media over the past few weeks. It's either a PM and his broken promises, or it's a PM willing to make the tough decisions to address the problems of the day. Now, I'm not here to offer any political perspectives or opinions. I'm here to take you through what has been legislated, what has been proposed, the impact of these changes in our marginal tax legislation, and some of the things that we're thinking about as advisors. Now, what does the current landscape look like? Well, firstly, stages 1 and 2 have already been implemented over the past few years. It's now at the point where stage 3 is to commence from 1st of July 2024. The initial changes were very much focused around low and middle income earners. Some of them were temporary, being low income tax offsets. Some were permanent with respect to changes in our marginal tax brackets and tax rates. And really the focus of stage 3 was about acknowledging stages 1 and 2 have addressed low and middle income earners. Stage 3 is more about those at the upper end of town. Now, the proposed changes from the Albanese government is about acknowledging that, well, the tax cuts for the larger end of town are actually quite substantial. Maybe we should reallocate some of those tax savings still back to low and middle income earners, because stages 1 and 2 didn't quite go far enough. So that's the main change that we're seeing. So on the left-hand side here, we've got the Morrison Government legislated tax changes to come in from the 1st of July 2024. On the right-hand side, we've got the proposed changes from the Albanese government. Now, there's every expectation that the proposed changes will be legislated. There won't be any pushback. There shouldn't be any negotiations or changes to these, but we won't know until the changes have been legislated and we're all sent given. So on the left-hand side, we see that there's only 4 brackets in the marginal tax rates this year. We had 5 previously. We're reverting to 5, and we'll see that essentially this large, let's call it middle to high income earner bracket of 45 grand up to 200 grand, where we were expecting a 30% flat tax rate for that really big band of earners, is basically being cut up. So the Albanese government still wants to maintain a 30% tax rate for everyone above 45 grand, but they're capping it at 135. From there, they're going to retain that 37% marginal tax rate up to 190, and then from 190 above, it's the same old 45% plus 2% Medicare levy applied to those high income earners. Now, you'll also notice a cut in the tax rate to those earning between $18,200, which is the tax-free threshold, and that $45,000 point there. So again, I guess just directing some of those tax savings to those low income earners. Now, what does it actually mean in dollar terms? The table I've built here just basically maps out different taxable earning levels over the course of a year. It illustrates the tax savings under stage 3 tax cuts from the Morrison government, the tax savings under Mr Albanese's proposed stage 3 cuts, and then the dollar difference. And we'll see in terms of the dollar difference, we're basically allocating these tax savings from the high end of town across low and middle income earners. And we see that the crossover point is about $145,000 per annum, where above that, you're disadvantaged as a result of Mr Albanese's proposal, and below that, you're advantaged. But let's be clear that everyone is going to be in a better position, regardless of whether it's the current legislated changes or what's proposed. Everyone is going to be benefiting from this with respect to some sort of tax relief. Now, what does this actually mean for me as an individual, or you as an individual, but also us as advisors? Now, if I'm paying less in tax, that means I have more additional cash flow. What do I do with that cash flow? Am I using it to build up a war chest for when my fixed mortgage is coming off, 1.8% and going to, 6+%? Can I use that additional cash flow to pay down debt or accelerate my my wealth accumulation, putting money into super, accumulating assets, for example. From a strategic standpoint, strategies that we've been putting in place in prior years may not continue to make sense in their current form moving forward because of this significant change in these marginal tax rates. Also, with respect to timing, because this year is looking very different to next year, okay, regardless of what gets legislated for next year, whether it's the Morrison or the Albanese stage 3 cuts, they're going to look very different. So when I'm thinking about strategically, what should I be doing this year and next year, there may be things that are better deferred till next year that are more suitable in that different marginal tax environment. And there'll be things that I actually want to make sure I do this year based on the marginal tax rates that apply in FY 2024. Okay, so being very deliberate around the timing of some of our strategies to get the optimal tax outcome. And the final point I've got here is being tax aware. You know, a really key pillar of our advice philosophies is being tax aware. So it's always the after tax outcomes that are most important. It's not the pre-tax outcomes. So from a strategic perspective, or whether it's a portfolio construction perspective and how your investments are managed, it's always a focus on the after tax outcomes. And so these proposed and legislated changes that are expected for next year absolutely influence the advice that you get from us and the considerations that we're thinking about when we're looking after our clients. Now, if you're unsure of what you're doing, why you're doing it, and when you're doing it, please don't hesitate to reach out. We're happy to discuss this in more detail, but hopefully that makes some sense. And it does sound like for everyone who is paying tax, who has taxable income, you're going to be better off from the 1st of July 2024, which is pretty well received by most people. Anyway, thanks for listening. Take care, and I look forward to speaking with you all again soon.